Mike Wilson mentioned that Morgan Stanley raising its price target on Microsoft to $189 from $157. That's a new street high. Morgan Stanley saying Microsoft remains the best positioned name in tech for the emerging hybrid cloud architecture. Widely held. Obviously, Joe, you own it. Steve, you own it. The stock put in a banner year. We all know that, up 55%. But, you know, a lot of these stocks in that universe had great years.
They did.
Too bullish?
Very logical premise on your part, but I'm going to let the market or in a earnings quarter that does not look like the prior 8 quarters for Microsoft dictate what my actions are going to be in the stock. And until I see anything negative, it's not going to reverse my commitment to being long Microsoft. I think the other thing about Microsoft is that it's been very enduring in the privacy and the regulatory technology conversation. They have not really been exposed to that. The diversification story of Microsoft we've all known about and talked about on the show. The cloud component is particularly the strength. And there's no reason, just because you suspect that maybe high is too high in terms of price, to move away from it until you get that actual evidence.
29 times earnings. Everybody cool with that?
It seems a little pricey. And Microsoft has been a fantastic stock. We didn't own it. We wish we owned it. But there may be other names out there. We think there are other names out there. And, you know, we're talking about a low teens EPS grower, 29 times this year's earnings, 26 times 21 earnings. So perhaps it needs to pause and grow into that price.
How do you deal with that?
I disagree, and I'll tell you why. Because the company's clearly well managed, and they manage the street very well.
Yeah.
So they put out their targets, they put out their guidance, and then they meet it or exceed it. And that's as important to a stock, in my view, particularly in this market, going back to what I said earlier, as valuation. So I actually think it's cheap, because I think it deserves a premium multiple on both those. Then you get to their dominance in certain areas. This is just a great stock for the market. So I look at others now, like Adobe. Adobe's much more expensive than this. So to me, this multiple should move up towards Adobe. Now, I'm not saying that I expect to get there, but as long as momentum continues, as long as management guides the street and lives up to what they promise, stock's going on.
Also, some very smart acquisitions. You know, we talk a lot about, well, who's going to buy Twitter? Could someone buy Twitter? But how about what Microsoft did with LinkedIn? Yeah. And the value that has now been realized.
There's another reason, though. It's 10.5% weighting in the triple Qs. It's 4.5% weighting in the spiders. Those are just 2 ETFs. I mean, every time a dollar comes into any of those ETFs and there's a huge wave to passive investing, it goes to Microsoft and other names.